XRP is likely going to surge a whopping 1,755% when it breaks out above this red trend line. Now, on the very positive news of the SEC settlement, the price of XRP has been edging the upper portion of this trend line, consistently getting bought right back up above the 38-cent range, the 42-cent range, and now it's currently sitting at about 57 cents. But people are becoming impatient. So how will it happen? What's currently keeping XRP down right now, and how can you take advantage of this move by preparing now for when it does happen? Now, XRP is easily one of the most popular cryptocurrencies on the market, boasting one of the strongest communities in the space, and has been a dominant player for social attention since its inception. So right here, the green line represents the price of XRP. This yellow line represents the social dominance. In other words, this is tracking the top 100 cryptocurrencies by market cap, and then it's tracking how often it's actually mentioned on all social media platforms. And the more that something is mentioned, the more of the social dominance it takes up in the entire crypto space. XRP actually holds a lot of mind share, ranging between 1 to 2 to 2.5% of every single conversation in all of crypto. At the yellow dots right here, you can see that we've had, it being talked about in second. At the blue dots, we've had between 4th and 6th place in terms of social mentions. And then the red dots represent first place in social mentions, which explains why XRP has been in the top 10 cryptos by market cap since day one. And if you look at it right now, it's currently sitting at number 7. Not only that, but XRP currently has 5.72 million wallets. Assuming that the average person may have multiple wallets, we can safely assume there are at least 3 to 3.5 unique wallets or individuals holding XRP. And this number has consistently been climbing since its earliest days. Back in even 2021, there were 3.2 million wallets. They've added 2 million wallets since then. What's even crazier is that this doesn't include the people who simply buy XRP on an exchange, and it goes into that custodial wallet, which acts as one wallet for potentially hundreds of thousands of people or more. Then when we take a look at the YouTube search volume on the monthly scale, the term XRP is searched about 3.5 million times per month, which is only second to Bitcoin at 4 million monthly searches. Not only that, but Ethereum, the second crypto by market cap, isn't searched even nearly as much. And Ethereum gets a weak 390,000 searches monthly. So with all of these metrics and the fact that XRP finally has reached a settlement with the SEC lawsuit, one that I likely think won't be appealed, why hasn't XRP hit a new all-time high yet? Everything seems super bullish, right? Well, in this video, I'll share 3 reasons why XRP has not broke out to new all-time highs just yet, and I'll also discuss how it's very likely XRP will pump at least 1,755% when it does, but more importantly, when will it happen? Well, I'll be giving you some potential scenarios that should take us through the end of the year and into 2025. I'll also dive into 5 things you should watch out for to know that XRP is well on its way to breaking out and making those all-time high gains. Last, before we begin the video, head on over to bullrunners.com and subscribe to learn how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game. This is our all market solution. Doesn't matter if the market looks more bearish or bullish. Ultimately, you're going to take advantage of putting that XRP of yours to work to either hedge against risk or hedge against volatility on the downside, and ultimately compound on your gains in the upside. So if you're feeling blessed and bullish, comment 777. And if you're going to be the richest person in your family tree, smash the subscribe button. Let's get into the video. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. Hello and welcome back to the Bull Runner channel. Now in this video, I just want to cover why people have been getting a bit annoyed with the current price action and impatient, and why you should be using every single opportunity. Okay, every single opportunity to stack to those XRP bags, because we don't want to be stuck saying we told you so if and when this thing does break out to new all-time highs and you were fading the opportunities to buy at current prices. Now, the first reason that markets and XRP have struggled to break out, at least this year in 2024, is not only because we didn't have a settlement with the SEC, but because markets have really been hurting, right? Interest rates have been extremely high to deal with inflation, and so inflation being very high has squeezed the average consumer. This is the aggregate rate of inflation. In other words, this is the average cost of living increase for people around the nation in the US. And right now we are currently sitting at about 25%. It costs 25% more than it used to go about living your life. And in this article from CNN Business, retailers have jacked up prices and squeezed consumers. They might have just blinked, and in it they state that retailers are feeling jittery, consumers aren't shopping like they used to. In a game of chicken between stores and shoppers, it's the stores that appear to be yielding first by dropping prices on thousands of products. It's telling that these categories considered to be discretionary purchases, meaning things that are nice to have but maybe aren't everyday necessities in the same vein as groceries and medicine. And here's what they stated: the budget-conscious consumer is no longer just low or middle income earners. By far the starkest decrease in intent to spend is coming from the higher income groups, and those who were previously the most immune to an economic downturn are now tightening their belts, because at the end of the day, the poor have always been poor, right? These people have always kind of struggled to make ends meet, but when you really start to see it in the economy is when wealthier people or upper middle class people start to feel the squeeze and tighten in on their spending. And we're seeing it literally in every sector of the market. Here's another indicator. 34% of parents said they plan to take on debt to afford back to school supplies this year. And 16% said they take on up to $1,000 of debt per Credit Karma. And by the way, I would argue they have their pulse on the market, right? We're talking credit here. 59% of parents say that due to the high cost of living, they will spend more money on back to school shopping this year compared to previous years. And you know what's crazy? It's not even just the consumer, right? This high rate of inflation, which is lowered demand because people don't have as much to spend, and then combine that with high interest rates, is also starting to squeeze the entire economy and businesses. The number of U.S. bankruptcies currently under Chapter 11 jumps to 2462, the highest count in 13 years. These bankruptcies have more than doubled in just 2 years. And this is showing up in virtually all of the incoming economic indicators. Right here we have the delinquency rate on credit card loans. So these are people who are using credit to essentially live life. Okay, and delinquencies being the amount of people that aren't paying back those loans. Now, we actually did reach the peak in April of 2009. That was just off the tail of the Great Recession. Then we started coming back down in 2011 when things started getting healthier. People started picking back up their jobs, right? The economy started getting back to a healthy zone again. We continued to decline through 2021 when personal savings increased to all-time highs, and now we are trending up and back into a range we have yet to see since the end of the Great Recession. Is this something to worry about? Well, that general weakness is definitely carrying over into the market, with major stocks dumping and pumping trillions of dollars per day, a lot of volatility, arguably the most volatility we've seen in a very long time since 2020 when the market crashed on the pandemic, but even more so. This is the type of volatility that we would expect out of a great recessionary type environment. That said, we've been in an uptrend since October of 2023, and you could arguably call this a bull market, right? And we were supported at the trend line, which really this support created the trend line. And then as of recently, we broke down. So yes, although we've been rallying off that low at 5,100 up to 5,400, we have officially broke down. Not only have we broke down below that trend line, but even when you pull up those EMAs, you can see that we are dangerously close to crossing over. The 20 EMA is right up here, and you can see it acts as a pretty good support in a bull trend, right? When we break down, you can expect further lows. This red line is the 50 EMA or moving average. And now we've broke down below that, and we're showing general market weakness. So yes, although we did dump and pump right below that previous all-time high range, when I see these types of moves more often than not, I'm tempted to sell the next major high of the range into a new low. This genuinely does look like a bounce and nothing more. This reminds me of situations that were similar to the summer of 2023, where we actually broke below the 50 EMA, pumped, made a new lower high, another lower high, continued breaking down. So these are the types of retraces that I would expect for us to actually get to a point where we start to see some range or level of support. And in similar fashion here, right at the end of the bull market in 2021, right when the Fed no longer made it legal for them to trade stocks, which was very telling, the market did the exact same thing. We had some insane volatility and swings and bounces and potential breakouts like right here for a bull trap before making new lows. This is eerily similar now that we've made this insane move to the upside. And this general market weakness is truly showing up in virtually all metrics. And you can even see here that the unemployment rate has consistently climbed for a period of now 4 months. And so this is very telling when we start to break into a new uptrend that we're going to continue moving in that direction like we did back here. And obviously this was completely uncalled for and unexpected, so it's very hard to predict anything like this, right, in 2020. But this would be more in tune or in line with an actual increase or a decline into a recessionary environment. So looking eerily similar to here back in May of 2008 before we actually started reaching the bottom somewhere in, I believe, March or I don't know, I think July of 2009. I know that the bottom came well before in the markets before we peaked off in unemployment. The third reason I think that XRP has failed to break out is because we also have a lot of traders and investors in the space. So it's less so people that are out there, and I'm talking institutional players, people that are looking at the total social sentiment, the community, and using that community to profit, right? At the end of the day, these are traders. They don't care if XRP succeeds or not. They're just looking at whether or not there's actual volume, retail interest, some liquidity to sell their bags into, and so they trade with the trend. And as of right now, although we've been in this major flag, right, it has been a downtrend. We've consistently seen new lower highs, and consistently that's been the case, right, even on major news. So whenever XRP pumps like this, right, they start to take a bit of profit. It happened here, it happened here, it happened here, and this is all indicative in the social metrics. So I believe that these traders take advantage of social sentiment and dominance to take profits off the table, right? Because they know that XRP can pump pretty violently on any major news announcements or deals, considering the community so large. So that said, back here in November of 2020, right before the lawsuit, which was right here, right? And the lawsuit's obviously going to create a lot of headlines. There was some profit taken. Now, anyone could argue, hey, you know, someone knew something and maybe people did, but this is really where people started talking. So what I'm really looking for, right, is right here in 2021 on the Pico bull market top for XRP of that cycle. You can see that social dominance and sentiment across the board, the volume was great. And so into that range, probably not a bad time to take profit. In similar fashion, when things really started pumping over here, you can see right before, and in terms of the social dominance in particular, it aligned perfectly with the local top when we got the outcome with the SEC lawsuit stating that XRP is not a security as a token. And in similar fashion, virtually all of the pumps have seen some major spikes, like right here. Not so much right here, but definitely recently we just saw the biggest spike in social dominance yet on the news of the SEC settlement, and people took profit into it, which is why the price has failed to break out, right? They're trading with the trend, but eventually, as the old saying goes, the trend is your friend until the bend at the end, and I do believe we're at the bend in the end. Now, before we dive into some of the things that you should look out for to know that XRP is going to break out to new all-time highs, go ahead and go to bullrunners.com, subscribe to learn how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game. It's so simple. If you have any questions or you're like, I don't know what this is, just subscribe, and then you can watch this video on the other side that Nick put together that explains how it works. And in 3 very simple steps, you get your XRP wallet, you get your game pieces, then you play the game and earn your crypto. So this is a great way to hedge against risk. If the market continues to dump, right, you're putting your XRP that you've already been holding to work, right, which allows you to stack up that bag of yours. And on the flip side, if the market starts to pump heavily, right, the benefit is that you've compounded on that bag, so you earn more money. So ultimately, you have nothing to lose, everything to gain just by checking it out. Go to bullrunners.com. You can find the link in the description below. Let's get into the video. Now let's take a look at some of the key indicators from the technical side that will give us clues as to when XRP is going to break out. The first thing that I typically train people on is horizontal supports and resistances. Typically, I just think that they are far more valuable than any other type of trend line. So for example, right, if I took a trend line tool and drew it like this, you can see that sometimes it's easy to just say, hey, look, once it breaks down here, it has to go back down, right? And the reality is you just keep moving the trend line over and over and over again, and then it breaks down right here, and then you're like, oh, let me move it again, and that's the trend line. And you could argue, because we bounced right here and we've held this range right here, look, perfect example, right? We were supported and then we should break out. And so, more often than not, these types of diagonal trend lines don't really act as support and resistances as well, unless of course it's a very long term, which is why I like to train people on horizontal supports and resistances. And I think those are far more valuable. And to give you a key example based on history, you can see that when we actually broke above this horizontal support and resistance right here, in this case it was a resistance, we continued to break out to new all-time highs in similar fashion right here, in similar fashion right here. Notice how we saw sell pressure, finally a lot of contraction before a major move and expansion. Well, now looking at the chart, right, one could argue that our real next resistance is somewhere between the range of 75 cents down to 70 cents, 68 cents, if you will. Okay, so if we hit this range, and so it doesn't always need to be a direct line. More often than not, right, you need a range. And I would argue this is our range to beat. This is the horizontal resistance that we want to break above. Then looking at history in similar manners, right, when we broke above this range right here, we want volume, which is the second key indicator you want to look for to confirm the move. Now notice how volume was very small right here, right before the breakout. Into the breakout, look at how much bigger volume got. Okay, this volume is confirming that the move is legit and the price action is showing. So even if, for example, we only got about half of the move to 0.013 right here, as you can see on the chart, it wouldn't really matter because there might be a lot of sellers above. That's totally fine. As long as the volume to the buy side is far greater into the breakout, that's a good consistent indicator that that the trend and the move is legit. And you'll continue to see volume increase. Notice how back here it looked so big, but relative to this move, it was actually really small. So volume should consistently increase in the moves to the upside when we actually break out, and actually decrease, right, on any sort of a retrace or in this case, a range. Well, in similar fashion, right, we are currently trading below what I would call a resistance and a breakout range, and volume has gotten really weak over the last year. You can see volume has consistently stayed either below average or at that average line, which is the blue line. And so in order for me to feel confident in this move and a breakout in terms of the trend, I would like to see a breakout to the upside in terms of price action and volume start to confirm that move into new highs. If volume looks relatively weak, or we get some sort of insane capitulation or sell pressure in a big red volume bar, then maybe someone is still taking profits in that range. However, if volume increases to the upside with the green volume bars and the buy volume, then chances are we are in for a new major uptrend. Now, forgive me, I know I just mentioned I don't love diagonal supports and resistances or trend lines, right? Because they're always kind of moving the target, unless of course you're talking about a 6.5 year diagonal trend line. And in this case, this would be a very valid breakout, probably more so than even this horizontal, although more often than not, when it comes to trading or swing trading, even investing, right? This works really, really well when you get a confluence of factors like this horizontal support and resistance line, and then you get this trend line breakout above on some volume. This would be an insanely easy indicator to say, yep, we're going to new all-time highs this time around. Then from a monthly time frame, you can see that the stochastic RSI right down here, right, when the blue line crosses over this orange or red line, that is indicative of a new uptrend. So this would be the fast moving average crossing over the slow average, and right here you can see we had a violent crossover right to the upside with some long strong wicks on the downside, which means and indicates that there's a lot of buyers between the ranges of 47 cents all the way down to 38 cents. Okay, that's great, right? We're touching the top of this trend line. We're about to get back into this 75-cent range if volume confirms it, and now we have this crossover. And in both situations and scenarios, either back here or back in 2021, we had that happen as well before the major move to the top. So I would argue those are all things you really want to watch for. You want to see this continue to look strong. You want to see volume confirm the move. You want to see a break, potentially above this trend line, but more importantly, above that 75-cent range on some strength with volume. But I would argue the majority of XRP investors are constantly watching the news, and that's totally fine. I think it's important to stay on top of the current events. However, it's also important to remember that the news should actually confirm the price and not the other way around.